In the last video, I walked you through the framework I use to understand what the market is actually doing day to day. Not entries, not exits, just clarity. In this video, I want to do something different. I'm not going to teach anything new. Instead, I'm going to show you several real examples of that same framework playing out on different days, so you can see how consistent this process really is. Because understanding doesn't come from hearing something once, it comes from seeing it repeat. If you didn't watch the first video, I highly recommend starting there. This video assumes you already understand how we mark the higher time frame range, the role of the midpoint, and how corrective levels work. Alright, let's start by diving into the chart and walking through our first example. You'll notice right away the same range is already marked from the previous video. That's intentional. I want to show how this same 1 hour range continued to provide context for the market, day after day. Okay, let's go back and look at this bearish move that eventually came back and found support at our 1 hour range midpoint. Focusing on the price action inside this gray box, let's break it down. The market made a clean, decisive move away from the range high. When we see that kind of behavior, it's something we always take note of. From there, the questions become simple. Where did price stop and what did it do next? Price stopped below all of these lows, something we recognize as a potential liquidity grab. But that's only part of it. Where else did the market stop? Remember what I mentioned in my other video. Midpoints act as magnets for the algorithm, and they also function as decision points. Keeping in mind that the market is fractal, the distance from the 1 hour range high to the 1 hour midpoint has its own midpoint, and that level just happens to be exactly where price stopped during this bearish displacement. Now, did price find support and create a corrective low? Yes, it did. Let's look at it. Inside this highlighted area, the algorithm had a decision to make. It could either continue the bearish move and allow the midpoint to fail, or it could support the area and rotate back bullish. This is what defines a corrective low, and in this case, the algorithm chose bullish. When price displaces away from the corrective low, we know the most likely draw becomes the 1 hour range high. That doesn't mean price gets there immediately, and it doesn't mean we won't see bearish price action along the way. It simply means our bias remains bullish until either the 1 hour range high is reached or the corrective low is broken with displacement. Let's look at the next leg of price action. Price comes back into the corrective low and briefly breaks below it. Does that change our bullish bias to bearish? No, and here's why. The level wasn't broken with displacement. As we discussed, we're looking for clean, decisive displacement followed by price respecting the move. In this case, price dipped below the level and immediately reclaimed it. That wasn't a structural break. It was the algorithm grabbing additional liquidity before continuing toward its destination. And remember, we're not looking for to-the-tick precision here. When price came back to the 1 hour range high, it didn't need to touch it exactly. It got close enough. These levels are ranges, not exact prices. You have to give your analysis a little room. So the next logical question is, what do we expect once price reaches the 1 hour range high? Do we immediately flip our bias to bearish? No. We go back into wait mode and let the algorithm show its hand. If it wanted to continue bullish, we would expect to see displacement through the level and price respecting the 1 hour range high. One important thing to note is that the area between the 1 hour range high and the corrective low becomes a wait and see zone. Price can rotate anywhere inside this area, including all the way back to the corrective low, before continuing higher. A rejection from the range high alone does not flip our bias bearish. That only happens if price shows clear displacement below the corrective low. That shift happens when price displaces through the corrective low, which flips our bias to bearish. At that point, the algorithm tips its hand and tells us it wants to rotate back toward the 1 hour range midpoint. I hope this video helped further clarify how to apply the framework I outlined in the previous video. With just a little time spent studying your own charts through this lens, I'm confident you'll start seeing the market more clearly than you ever have. Without indicators, without signals, just logical levels and an understanding of how price actually moves. If you found value in this video, hit the thumbs up. If you want to see more content breaking down this framework, let me know in the comments and make sure you're subscribed. And if you're looking for more than I can cover in these videos, consider joining our community. The link is in the description. Thanks for watching, and as always, trade with clarity.